Well, thanks for staying tuned. Well, this next conversation has us looking at how expedient it is to know the developments in the oil sector, especially as they affect the region and also especially as the Tinubu-led administration hammers on the oil sector reforms and the accruable gains. Now, what are the gains? Are the questions thus far. Since the resuscitation of some of the refineries and the country, has the economy grown is the question on every Nigerian's lips, especially looking at the situation of the economy. And have we been able to effectively tackle the issue of regular fuel shortages? That was the question before now. Or would we say that we've finally been able to stabilize prices in the sector? And if we were to talk about further crashing these prices down, how effective has that been, and how much would it reflect on the hardships that Nigerians still feel in the polity? These are salient questions seeking answers, just as would be also joined by an oil and gas expert who knows exactly what's happening in the sector and is going to be bringing us up to speed with some of these developments, talking about the person of Dr. Wisdom Enang. Dr. Wisdom Enang, you're welcome in Niger Delta today. Good to have you on the program. Good afternoon, Dr. Wisdom Enang.
Hi, good afternoon, Rob. Thank you very much for
Thank you for joining us on the program. Well,
thank you.
Yes, there's been a couple of developments within the oil sector in the country, and let's start from the most significant one, which is, of course, that what Nigerians would want to hear: the continuous crash of the price of petrol. We know that in Lagos it is sold well below 900 naira now, and talking about coming down here to the Niger Delta region, here in Akwa Ibom State specifically, we're buying fuel a little bit above 900. What would you say this means, especially with all the conversations we've been having around the developments in the oil sector? Does this mean that the reforms and the gains that were envisioned are beginning to trickle in gradually?
Yes, thank you very much, Robert. I'd like to say impressively the reforms are not only taking effect, they are taking effect much quicker than we anticipated. And that's because I never thought that the market forces would swing in so quickly and determine the pricing almost immediately. This was something that I never thought would happen quick enough. Now, here's the thing, right? Let's look at the factors that are determining the pricing at the moment. The first is the reducing cost of the feedstock itself, which is the crude. The second is the exchange rate, which has sort of gotten within the stable region, although still having some undulations. And the third reason is the crude for naira deal, which has really helped to reduce the effects of having to source for FX for the transactions by the refineries. And the fourth one, which is very important, is the competition between the imported and the domestically produced variants. Now, if we look at the the competition as a standalone, right, because that's a very impactful one, we see that every time the landing cost of imported fuel is below the Dangote pricing, we tend to see a price review. Just recently, the imported cost as of 2 days ago is about 774 naira per liter, and the Dangote has had to review the price as of this morning to about 815 naira per liter. And what that means is that the prices are only going to come down for as long as that healthy competition, looking at the cheapest alternative around for that commodity, is going to ensue, and that's quite a good thing. So in essence, the entire reforms of the federal government was designed to achieve a transparency within the operations of the refinery, was designed to supply the refineries with the feedstock for them to go on with their baseline production. It was also to ensure that we have a willing buyer, willing seller market where there's a healthy competition, whether domestically, but also versus the imported variant. And it is, sort of a summation of all of these, components, the competition with international folks and the domestic refineries, the exchange rates, which has appreciated within a stable region right now, as well as the crude for Naira deal, and of course, the fact of having a much engendered production levels for domestic refinery. These are the things that has created the effects that we see and that consumers are happy with today. So I think it's a very laudable and well-designed initiative from the federal government. But then the question on your mind, Robert, is going to be, how does that affect consumers? When are we going to see the prices of commodities begin to come down?
Indeed.
And the answer is very simple. The prices reflect immediately upwards in Nigeria, but they are very sticky downwards. And I'm going to go through from a sectoral perspective. I know in top of your mind, you're thinking, well, transportation should come down. Yes, but that's transportation that has to do with PMS. But also understand that there is, all things being equal, transportation should come down. That's in adherence to the Adam Smith theory of economics. But let's look at a scenario where all things are not equal. And that scenario happens when you see that, for example, the cost of maintenance is going up, the cost of labor is going up, and the only thing that the differential, gain in the pricing of PMS has come to do is to ensure that it balances out the incremental cost of maintenance and cost of paying the new minimum wage. Without which, we would have had an increased cost of transportation. So for some transporters, you find out that it stays the same. But that's because that is what I call a latent sort of, a latent benefit to the business that's coming. You're not feeling that from a consumer standpoint, but it's absorbing a cost that should have otherwise been passed to the consumers. That's one part. If you then move away from the vehicular transportation from one place to the other and move into the transportation of goods, you find that a lot of the transportation of goods and services are done with trucks. They're done with actually high high capacity vehicles that use diesel. And with that means that you're almost, talking about the price, benefits of the PMS at the moment. But then what you're referencing is actually a vehicle that actually, a heavy utility vehicle that uses diesel. So you do not expect a reduction in the food transportation cost because most of it is done with trucks, very huge trucks that use diesel because of the high power requirement. Now, if you come into the consumer pricing index, you find out that on that end, there are two things that are stopping the prices from reflecting immediately downwards. And the first is the inventory. A lot of people purchase within an inventory window of 1 month to 2 months. And if they purchase within that inventory window, it therefore means that they will need to sell off that before going back to go and repurchase, and then that's when they will see that reduction in pricing. The second thing is the natural psychology that people would bet with higher odds that there's going to be much higher cost of fuel and there's going to be much higher inflation in the horizon. So that means certainly will not be very quick to recover their price, to reduce their prices, so that predictively, if the next cycle of inventory comes in at a higher cost, they will still be profitable if you balance out both inventory. But they do not want to reduce it and then end up making a loss if the next cycle of cost of sales means that they incur a lot of costs and have reduced profitable margins, or even get into having a loss. This is the psychology that governs the relationship between consumer pricing index and the cost of PMS as we see in the market today.
All right, Dr. Enang. Well, you have reeled out a couple of components that could play major roles in influencing the pricing in the market now. But then there's this very critical issue also, which is, of course, the issue of selfishness on the part of the persons that are at the helm of affairs, the stakeholders who control the market. Would you say that artificial influences also play a role in preventing these prices from crashing, especially? And what are the roles of those regulatory bodies when it comes to this point in time?
All right. It is very important for us to understand that, yes, especially when it comes to a unionized market, the unions tend to sort of stifle competition to a large degree, although they also have benefits that they play in the market, but they do that to protect the sellers and create a seller's market. And no matter what you want to do, no matter where you go, that's somewhere you from one point of protecting the sellers. However, when you look at a market system like we operate for the most part, even when you go into commodity pricing, you find out that the only joker in the pack that the regulators can do is to stimulate more supply. And you either stimulate more supply because you have supply somewhere, like example, maybe the government had cheaper food items and they flood that market with cheaper food items, or you stimulate supply by engendering another source of supply that will compete with your domestically produced food options, for example. And we've seen that whilst it is from an energy perspective, we can argue that okay, this is going to give some real benefits, to the consumers, and also balance that out with not killing the refining industry just because of the fact that the refineries at the moment, for example, the Dangote refinery, it has a lot of resilience and competitiveness built into its model. If you take that to the food side of things and say, well, let's open up our borders completely, let's get all the food import, what would happen is this. You would have cheaper supplies from people that have been able to commercially produce quantities in other countries, and even China, for example, when it comes to frozen food items. But what you're going to do is that you will change a lot of the farmers that were farming, because their cost of production, taking into consideration all the electricity costs and every other cost component into consideration, their cost will outweigh the selling price of the imported variant, and they abandon ship and then go into perhaps importing, processing, and selling. So sometimes, my friend Robert, you need to balance whether that model is going to give you cheaper products in the interim, but bring longer structural issues in the industry. And this is just a very honest sort of exposition of the reality. The other thing the government can do is to engender domestic production itself by making sure that they fund that sector, whether it be food or they fund the manufacturing to stimulate growth, so that there are more production options. A lot of people are coming up with ideas and scale of production, economies of scale, and then passing that on by way of sort of tweaking with the economic fundamentals to pass their cost savings to the consumers as reduced cost of the items. But other than that, we do not have that many jokers in our cards. The only joker the government has is to have supply to be able to control where the market direction is going, especially in an unregulated market.
All right, Dr. Enang. Well, it is no longer news that the oil sector plays a very major role when it comes to the economic turnover of the country. Now, in 2022, we know that there were reports that the economy grew by 3.3%, and the World Bank further projected another 3.3% growth for 2024. Currently, in 2025, it's saying that it's envisioning a 3.7% growth in the Nigerian economy. With all of the reforms we're seeing play out within the polity here in Nigeria, what level of growth are you envisioning that we'll be able to rake in 2025 and moving forward?
I think the government would keep to those targets, but my worry is, how do we translate economic growth on paper to opportunities for the common person? And to bridge that gap, I think it's going to be, the the role of the subnationals, and by that I mean the governors of the various states. So let's give an example. You could say Nigeria's economy has grown by 3%. But out of those 3%, if you take a discretized view at the 3% growth, a lot of that could come from places like Lagos, Abuja, Port Harcourt, for example, right? But that in itself, just the bulk number of growth, does not tell the story as to how much each of the states and the sectors have contributed to this growth. So I think, whilst I love the story about the overall growth of the country, I think it is important for each governor to ask themselves in each of these opening sectors, whether it be the marine blue economy that we're trying to tap into, whether it be in the digital economy that we're trying to tap into, whether it also be the solid mineral sector economy. These are sectors that are opening up. The question on the minds of every governor should be, how exactly are we tapping into these various sectors to ensure that growth trickle down?
And because it might seem as though the entire focus is on the oil sector.
Pardon?
I said, because it might seem as though the entire focus is always on the oil sector, when the conversation has always been about diversification and finding out other means of raking in the economic benefits that we need to run our country.
Absolutely, Robert. And what I'm trying to say is, we take a non-regret position, and a non-regret governance position is always the best. We already have the oil. The oil is there, so that's a baseline, it's a given. Now, in all these growths that are contributed from the non-oil sectors, how do we tap in? And how do we reposition our economy for further growth? That is exactly the question that I think, but in terms of the government meeting the targets, it's very important. And one of the things that I think Nigeria ought to be doing is, the idea of going out there to market Nigeria shouldn't be an affair for the president and his team, just only. It shouldn't be. We should have, at each state, some of the best minds that come together, proceed the right investment ideas, put together physical frameworks that will put some icing on the cake to attract investors, and then go out there. There are so many investment summits, conferences, even one-on-one meetings with investors. We can do that.
Personally funded trips, Doctor? Would you say these would be personally funded trips?
No, I wouldn't say personally funded. These are all part of government costs to sort of, you do not speculate, you do not accumulate. So the government needs to put out funding. But I'm only saying it shouldn't just be at the national levels only. The state should replicate all of that. Put together a calendar to get the best minds in place, whether there be APC, PDP, or whatever party. As long as they're the best minds, let them come into the room, and let's put that best foot forward to showcase not only that Nigeria's trajectory is on a positive trend, but this is how our state is positioning itself to be part of that, and these are the sort of economic benefits and the fiscal incentive on the table for
all right, Doctor.
A would-be investor. I think that is exactly how we can also contribute.
All right, Doctor. Earlier you had spoken about the crude in the country, and you also spoke about the exchange rate. And I'm wondering, what level of relationship exists between the crude and the exchange rate currently? We know that it's been crashing down. I mean, we almost exchanged a dollar to 2,000 naira. But then we're seeing that it is way below 1,500 naira now, or thereabout. Would you say that there's been some level of relationship between the crude and the exchange rate, and what we are seeing play out currently in the foreign exchange market?
All right, I think there is a direct relationship, not a direct relationship. Now, the reason I say so is, the crude prices are not exactly going up, they're coming down. But what has happened is that Nigeria has had more money simply because it has increased its production beyond the levels it had envisaged, for budgetary reasons. And so that increased production means that we've been able to have an overriding positive effect, that overrides the reducing crude prices globally, and that means that we have more money to intervene into our currency market. And with more money to intervene into our currency market, we can sort of put in a very positive trend in terms of our economy, and that would signal the fact that there's something that is, that is going on in the economy that is attracting foreign direct investments and foreign portfolio investment, which is ultimately what you want, more of those, and less demand for the dollar, which is where you then reverse the trend and make the naira to begin to appreciate. So I think the government has cleverly understood that with the crude for naira deal, they're losing crude there. We're paying for some of the crude back loans, they're losing crude there. With the fact that the crude prices are dropping, they're also losing the effective price that money that they're getting for income that they're getting from the crude sales. So they have increased their production. You heard between, I think, the last 2 months, the government has exceeded the OPEC quota. And what that means is that we're now in a very comfortable position where we can intervene the way we'd like in our currency market, keep it stable or keep reducing that exchange rate.
All right, Dr. Enang. Well, recently the president had made a couple of remarks as regards what's happening within the reform sector and all that he has brought to bear within his administration. He was hosting some delegation, and he spoke about how Nigeria has squandered 50 years of its livelihood, funding, other events in other parts of the world, especially as it relates to oil now. And he says that his administration is committed in ensuring that this does not happen anymore. What do you say that the approaches that he has implemented so far are what we truly needed all these years in getting ahead and ensuring that we had a full grasp of what's happening within our economy, talking about the oil and gas sector now?
Yeah, I think the president's approach is a very laudable one, and I will enunciate this. Now, let me explain. If you look at when the president came in, he understood that, yes, there's a difference between having the right legal ambience and having the right competitive fiscal regime. And one of them could maybe stay relevant for a long time. For example, the right legal provisions, the PIA, it could stay relevant. But when you talk about the fiscal regimes as contained in the PIA will almost get irrelevant over time. And irrelevant not because it wasn't designed properly, but as time goes on, new production frontiers come up. And with new production frontiers, it means that the terms that people are putting on the table and the times and the economics of the time means that, people elsewhere becomes more attractive. So the president has come in, set up a team, looked at the competitiveness and put together the presidential directive on oil and gas reforms, which has really stabilized the market. The other thing is, so the first thing is making sure the market is competitive. The other thing is looking at our production costs and the bureaucracy around contracting. And those were all contained within the president's directive. The other thing that has made the oil and gas stand out very well is because Nigeria now favors the idea of a production bonus rather than a sign-up bonus with its bidding rounds. And that's really important because, think about it, what people used to do in the past was simply to get an oil license, get some money through loan to pay off the signature bonus, and then use the rest of the loan and feed very fine and comfortably without actually developing this field.
All right.
And what the president has done is said, look, we're not interested in your huge sign-up bonuses. Use that money and develop these fields within a certain period of time, or you lose the field. That is why the rig count that used to be 8 in 2021 has now gone up to 40 today and heading to 50 within before the 2025 year ends. So those are some of the positive indications of this presidency.
All right, Dr. Wisdom Enang, oil and gas expert. Many thanks for sharing your ideas on the program. It's really always very engaging to have your time and company on the program. Thank you very much for your views on the program this afternoon.
Thank you very much, Robert. Do enjoy the rest of your day.
And you too. Well, that is Dr. Wisdom Enang, an oil and gas expert, shedding some light as regards what's happening within the oil and gas sector in Nigeria. The recent gains so far, as announced by the federal government and the NNPC. We'll take a breather, and when we return, we'll turn our sights on the Akwa Ibom entertainment industry. The gains so far, what work needs to be done, and of course, some of the talents that need to be honed. So stay tuned for that one.
Now here's